The government kickstarted and launched its sovereign gold bonds. I'm sure many viewers out there have been getting email alerts from either your money managers or indeed from various banks as well to try and subscribe to the sovereign gold bonds. So no time then right now to bring on board Dhirendra Kumar and try and revisit this theme on whether or not these sovereign gold bonds launched by the government do make sense for investment or not. And Dhirendra Kumar joins us on the show right now. Dhirendra, hi, good afternoon. Let's just revisit this theme, Dhirendra. Firstly, just a quick explanation on why one should even look at sovereign gold funds and what is the government really, trying to do by this method?
So one is that ideally, if somebody is thoughtful, they should not do that. But when it comes to gold, Indians are not thoughtful, and that is what the government realized 2 years back, and that it's very important policy objective to ensure that Indian investors are not buying gold and actually remitting foreign exchange and getting gold as relatively unproductive asset. So with that in mind, government devised these schemes. One is the sovereign gold bond. Then you have the gold monetization scheme. Temples are actually putting their gold and are able to monetize it, generate some return out of it. And this actually translates into recycling that gold into the market. And so the government policy objective is very straightforward. Somehow make sure that we are not, remitting foreign exchange to buy gold and liquefy and in a limited way ensure that, some of the demand is met by these methods, which is productive. And in a manner also more rewarding for the investor.
Right. So now the bigger question and the more critical one, considering the sovereign gold bond has now been launched and, like I said, everyone's email is just flooded by banks trying for us to subscribe to the sovereign gold bonds. Does it make sense at all to even look at sovereign gold bonds for investors who are already invested in equity either via the direct route or through mutual funds?
No, it doesn't make sense. I don't think it is. But right now the problem is that investors chase performance and Indians like gold. So that's very hard to, overcome that. And so I would say that if at all, for emotional reasons, for other reasons, you think that you have to invest in gold, then this is a nice way of doing it because one, compared to physical gold, it is a better way of holding it. You don't have to worry about the security. You don't have to worry about the making charges. It has the least of overheads. That's one. The other alternative you have is the gold fund or the gold ETFs. It is even better than that in a sense that the long-term capital gains exempt if you hold it till maturity. You earn 2.5% as compared to incurring expense in gold ETF, which actually, so gold goes up by X%, you earn X minus expense ratio, which could be, 1.5%. And here you get X plus, gold goes up by whatever or depreciates, but you get 2.5% more. So undoubtedly, this is the best way for any person buying gold or, wanting to hold gold as an investment. But rightfully, one should not.
Just to try and understand, if one is hell-bent really on looking at an exposure into the sovereign gold bond, Dhirendra, what is the taxation and what is the interest rate process really for these bonds?
Taxation is, these will be listed. The volumes may not be very high and the market has to evolve, and as newer tranches come in, there will be reasonable liquidity. And the price will be linked to gold prices. So the last tranche actually translated into some hefty profit for, anybody who was looking at it short term. And it will be, if you hold it till maturity, it will be treated as capital gain, which means, it will be indexed and then the profit, if any, will be taxable. And I don't think, on a long-term basis, you will be liable for any taxes simply because I don't visualize, look at some of the examples there, look at the gold funds as an alternative available to Indians. Despite some great years and despite some disappointing years, the real return, the absolute return on gold for, ever since they started is, below fixed income. And lower than fixed income, you are unlikely to be paying taxes. So effectively, the return becomes tax-free on this.
That's great to hear. Such a clear thought really on whether or not one should subscribe in the first place, Dhirendra, to these sovereign gold bonds. And the answer is no. Equity-linked savings still win, according to Dhirendra. Dhirendra, always good chatting with you. Thanks much for joining in today.